What is a butterfly? We're going to start by looking at a long put butterfly. Now, before I leap into this butterfly, the underlying stock is going to be bookingholdings.com, and I'm going to talk a little bit about that. And the main reason why we're going to use this strategy today on this underlying is because of the value of the underlying stock. And I'm going to get into what's the difference between doing low value stocks and high value stocks. There's some benefits to having a little bit wider spread in your butterfly that a high price stock affords you. So how many people out there, I see a lot of people in that chat box, how many people have actually done a butterfly before, or is this your first time learning about it? And while you do that, I'm actually going to jump into optionsplaybook.com. And we're going to start by just looking at a butterfly with puts. Now, the reason why I'm going to talk about puts is we're in September and October. And because of that, all right, so we got about 50-50 from what I'm seeing inside the chat there. So we got about 50-50. So that's excellent. That's excellent to know. We got a fairly advanced crowd here. When we look at a long butterfly with puts, I'm going to focus on the put side of thing because in general, the market obviously got some good news yesterday. I guess it was interpreted as good news. It's hard to say by the actual reaction, but the Fed came out and said they're going to lower the Fed funds rate by 50 basis points, where it was anticipated, well, by the time it got to the actual meeting, it was about a 50-50 chance that they might go 25 basis points or 50 basis points. So the market has taken that as a positive, but we're in September and October. So here's part of the reason why I'm jumping right in and talking about long put butterflies is if I'm bearish on the marketplace, I like to use this strategy. And there's a modification that we can do to the strategy. And when I come back, I'm actually going to talk, that next presentation that I do here at Options Play is actually going to be about how we could modify the strategy if it's gone against you. But we need to walk before we run. So let's start by just looking at what the put butterfly is. And this goes hand in hand with the call. Everything that I talk about today can be transferred to a call butterfly. There's really not much difference. But if we have a stock, the way the options playbook is laid out, and this is the book that I've authored, is we talk about a put butterfly being at the money, the underlying stock being right here at strike B. We're going to target this. In our examples, we're going to have the stock up here by strike C, somewhere in this range, because we're going to be bearish, and that's part of the reason why we're going to use puts. But in this example, we're talking about the stock being right here, right at strike B. And if you put on the put butterfly, what you're really doing is you're combining two different strategies. So if you've done a long put spread, or if you've done a short put spread, you've done a butterfly. But the biggest difference is you actually have to put those two trades together to come up with the butterfly. So here's the standard setup for a butterfly. You're going to buy a put at strike A, and then you're going to sell two puts at strike B, this middle strike in our example, and then you're going to buy a put at strike C. Now, like I said, this says the stock is generally at strike B. We're going to have the stock somewhere up here in this range when we're looking at our examples. So let me go back and actually show you what I meant when I say if you've done a long put spread and you've done a short put spread, you've actually done a butterfly if you combine them all into one trade.